All right. All right, everybody. Good evening. Good evening. Good evening. Like I said, I am talking to you guys from Jacksonville, Florida. I just got done talking to a bunch of military people at the Coast Guard base, trying to help them with their transition and all that kind of stuff. So it's pretty cool. Always nice to be able to give back. And I'm here. I appreciate you, David, Anka, for inviting me. Jim, the options professor. You guys are awesome. Thank you so much for having me back. When I was told about today, I thought, one of the good things to talk about would be trading around earnings. I could talk about a lot of things, but I thought trading around earnings might be something that you guys might benefit from. And so I thought this would be something that would be cool to do today. Without further ado, let's go ahead and start by saying this first. Everything I'm going to talk about here is for educational purposes only. Please understand, I am not a licensed financial advisor, so please make sure that anything you do it understanding that there's risk involved in the stock market. Okay. A little bit about myself for those who might not know. My name is Wally Olopade, and I apologize, I don't have the slide about my introduction up here, but my name is Wally Olopade. For those who might not know who I am, been investing in the market for over a decade now. 2008 was a very bad year for me. I was involved in real estate at that time. And what ended up happening was that I lost a lot. I lost pretty much everything, honestly. And I had to bounce back again. In that process, I realized that there were people who made money from the stock market, and I wanted to know more about the stock market. So, one of the biggest things I decided to do first and foremost was try to identify how to tell when the market was ever going to go into another bear market so I'm not caught off guard. And so, because of that, I've been extremely successful picking tops and bottoms. The track record on that is like impeccable. Um, Everything from even before the COVID um, hit the top of the COVID back in February 2020. I think it was actually in January 2020, we kind of spotted the top. We started alerting people about that. The bottom in March of 2020 of COVID, we saw that too. We alerted people about that. Fast forward to 2020, that was 2020, I'm sorry, 2022, when the market started going into a bear market when it topped out in January of 2022. Pointed that out as well. Same with Bitcoin. When Bitcoin topped out in 2022, mentioned that. When the market bottomed in October, we mentioned that as well. And then most recently, this January, anybody who follows me on social media would attest to that. I don't really write much, but I only really write when I see major stuff going on. So I wrote an article and I posted it on social media that the market has put in the top. There was topping patterns forming, and everybody should be aware of the market going down, blah. That was on January 14th, 2025. This year, I said it's time to take profits, it's time to exit, do whatever you got to do, but something is not right. And lo and behold, we saw the market drop in like we've seen thus far this year. Now, on April 7th, I also wrote another article. I think actually April 7th or April 8th, I believe. I wrote another article and say, hey, we put in a bottom and it's time to get back in. And nobody should be sitting on the sidelines because the market's ready to go back up again. And lo and behold, we've been seeing that the market's been going up since April 7th. Okay, so April 7th, April 8th. So again, that's just what I do. And everything is based off of just technical analysis. So anybody who knows me, I am big on technical analysis and quantitative analysis. So that's what I pretty much do. Okay. All right. Because of that, um, I also notice a lot of patterns that tends to occur in stocks. And one of those is what happens around earnings. Now, for me, when I first started as an investor, trading earnings was a very difficult time. Trading earnings was a very scary time. But I was able to figure out how to trade around earnings, and that's what I'm going to be sharing with you guys here today. Okay. Now, because of just today's presentation, I'm going to share just one stock, one of my favorite stocks that I like to trade around earnings, and just show you the consistency, because that's one of the biggest things I like to tell people is like if you can be consistent in something, you can do well in the stock market. So I'm going to show you the consistency on this, and that stock is Bank of America. I love trading around earnings for Bank of America. And so let me show you some of the stuff that we do here. Okay, so here is a chart of Bank of America going all the way back to October 2020. Okay, I'm gonna show you this. And you can see where their earnings came out. Um, I don't have my marker here, but you can see earnings right there. Let me see if I can do this. Hold on one second. Give me a second here. Let me see if I can bring my marker up. That comes up. There you go. Okay. So now let's go back to the slideshow. I'm gonna pull this to the side over here. All right. So apologize about that. Okay. So you can see right here, this is where they had their earnings. That's what I highlighted right there. And one of the biggest things that I pay attention to when companies report earnings, and again, not every company, but select companies that I love to follow and I love to trade around that are companies whereby they make an announcement. The announcement comes out, they beat top and bottoms, but more importantly, they beat the bottoms. Okay. And if you don't know what that means, that just simply means that, most companies have the top, they call that the revenues. So there's an estimate that analysts make before they make that announcement about their earnings report saying, hey, we expect this company to do this much in sales on revenues, which is very different from the earnings, the profits. Okay, so they'll look at the earnings, they'll look at the profits, and they'll say, okay, here was the estimate, and here was the actual. Did they beat earnings estimates as far as the revenues? Did they beat the estimates as far as the earnings? The one I want to pay the most attention to is the earnings, not the revenues. I mean, I'm okay with the revenues, don't get me wrong, but the earnings is what I like to pay attention to. And what I want to know is that they beat earnings. Okay. As long as they beat earnings expectations. So meaning that if the expectation was that they were going to do 2.3 billion and they did 2.31 billion, they beat expectations. When that happens, then I know that I have an opportunity to definitely take advantage of what is about to happen with that stock. Okay. So unlike where before, when I first started, I used to try to anticipate what was going to happen the day before earnings. I no longer worry about that. I don't even bother with trying to anticipate earnings. I just wait until the announcement is made. And I just pay attention to particular stocks that I like to follow and say, okay, did they beat their earnings estimate? If they beat both the revenues and the earnings, which means that they beat top and bottom, that's great. If they just beat earnings, then that means they beat the bottom. If all they did was beat the top and not the bottoms, then I kind of like, okay, there's a slightly different play on that one. Okay. So far, so good. So when I know that a company has beat their bottom, especially the bottom, they beat top and bottom, that's great. They beat the bottom, that's even more important. Then I pay attention to what's going to happen to that stock over the next 3 months. And this is how I play my earnings. Does that make sense? And part of that reasons why I came up with this was because I would listen to a lot of the old timers, the Warren Buffetts, the Peter Lynches, John Templeton, if you ever get a chance to watch videos of his back in the day. One of the things they will always tell you, and this is a common notion out there, is that earnings drive stock price. Earnings drive stock price. The reason why they pay attention to it. Earnings drive stock price. And when I first used to hear that, I said, okay, wow. So if they beat earnings, then that stock is supposed to go straight up. And what I found out that that wasn't the case. And some of you guys have probably experienced that, and you probably witnessed that, where they say, oh, it beat top and bottom, but the stock keeps on going down. Right. And that's what I started realizing is that, okay, if they beat top and bottom, especially if they beat top and bottom, but the stock keeps on going down, don't panic. Right. If anything, what that is doing is allowing us, and allows me to get in at a much cheaper price before the stock goes up. So what I realized is that there's, I guess you want to call it a delay in the price actually moving. Now, some of them will move right away, don't get me wrong. But the ones that I prefer the most are the ones that I know beat the top and bottom, and then the stock goes down. And most people's like, it doesn't make any sense. And I used to be that person that used to complain. It doesn't make any sense. The stock beat tops and bottom. Why is it going down? Why is it going down? But now, since then, I've learned, oh, you know what? This is a great opportunity. this is a great opportunity to make sure that I can buy this at a discounted price. Okay. And so for that reason, once the company reports their earnings and I can see that they beat the bottoms, especially, then it's just a matter of waiting time to see when it's going to happen. So you notice that um, Bank of America in October 2020, they beat their earnings, but what happened to the stock? It went down. And this is what I'm talking about. But notice what happened after that. The stock did what? Had a humongous rally. We're talking about from $23.50 all the way up to $29 when the move began. Okay. Most people would have missed out on that simply because they were expecting that, hey, as soon as they beat their earnings, it should start rallying higher right away. But hopefully you guys can see what I'm talking about here, where it's like there's almost like a delayed gratification type of situation where it goes down first, or at least that's the one that I love the most. Sometimes again it can go straight up, don't get me wrong, but whenever I hear that they beat top and bottom, stock goes down, amazing opportunities to definitely jump into that stock. Okay. And so typically what I try to do is I try to buy 1,000 shares. So all these examples you're going to see here is buying 1,000 shares after I know that this happens, right? And then what you'll find is, at, you know, um, $24.69, you buy 1,000 shares on that. You're talking about like $24,000. Okay. Now you don't have to buy $24,000. You can buy, just one share. You can buy 10 shares. You can buy 100 shares, whatever you can afford to get. But the key is I now know that this is a stock that has a huge opportunity to go higher. Okay. On 1,000 shares, after we sold at $28.69, which is somewhere around here, that lets you walk away with $4,000 profit, right? Now that's on just the stock. That's not including any type of leverage. So if you have a margins account, you have all this kind of stuff, that plays a whole different ball game. So if you have a margin account, and depending on how much margin you have, whether it's a 2-for-1, if you have a 2-for-1 margin, you don't need to come up with 24,000. You come up with 12,000. Okay. If you have a 4-for-1 margin, now we're not even talking about $12,000. You're talking about maybe approximately $6,000 that you're coming up with. Okay. So it all depends on what type of margins you have and what you can do with it. But again, just the stock alone, just the stock alone, you have a 2-for-1 margin, put in $12,000, coming away with about $4,000 profit on your $12,000. Not a bad investment in this. And we're talking about maybe within the next 2 to 30 days, approximately, is what you'll see. Sometimes it can go longer than that. Sometimes it can go shorter than that. But that is, in essence, what this is all about. Okay. And what you'll find is that this happens over and over and over. And so one of the things that we do is that we don't mind going in there and buying some options on this as well. And so we got the options at $24, which is typically at the money, whatever the cost that is, buy that. And then you hold on until when you're ready to sell. And so now that same option that you bought for um, $175. Now you're selling for 465, which is actually 162%, not 62% right there. Okay. But that's the idea behind this. Does that make sense? And this is one of the easiest times to get involved in those options simply because what you'll find is a lot of the volatility is out of these options at that period of time. Some of them might make major news headlines and, that could affect it. But then as time goes on, if you give it enough time, what you'll find is that you'll be able to see the sense of whether it's just the stocks that you're buying or whether it's the stock and the option or whether it's just the option. Is all up to you how you want to do this. But the key here is here's a stock that beat top and bottom. Here's a stock that especially beat bottom. And then now we know one thing is chances are very, very high that this stock is going to go higher. Okay. And then you just position yourself for that, stay on the right side of it, and you'll see how it goes. All right. Um, where's my mouse? So here is the next quarter. So this is, and again, you don't need to do this every single time. I mean, this is not sitting down in front of the computer screen every single day, watching this. We're talking about you get in. Maybe monitor this every night, every couple of nights if you want to. And that's pretty much it. 2021, January 2021, never forget it. Part of that reason was because we were just coming out of COVID, so to speak, and the world was finally beginning to move around. I remember I was actually, I'll never forget, I was in Ohio, Cleveland, Ohio, on family vacation with my family when I was expecting their earnings to come out. And so earnings came out on Bank of America again and beat tops and bottoms just like I wanted to. And then notice what proceeded to happen after that. The stock literally went down. And this is where a lot of people say, hey, wait a second. It beat top and bottom. Why is the stock going down? You know? And so when earnings came out, the stock was trading at around 32 something, almost $33 when it came out with earnings. All right. But then after that, notice how it dropped all the way down to 30 bucks down here. Now, I didn't get in at exactly $30, but hey, it was still better from $32, let's call it 32.50, as opposed to 32.50 getting in at 32.50, we were able to get in at $31. And this is why I truly enjoy and like this whole concept here. Okay. Because rather than trying to chase a stock, it's like my mentality and my concept and my understanding now is okay, it beat tops and bottom, give it some time, you'll get it at a discounted price. Does that make sense? You'll get it at a discounted price. And so now the discount price comes. What I end up seeing is that, hey, now we can get into the stock at $31 per share, which is somewhere around here. It's when we got in. Then the stock did its thing, went higher again. All right. 1,000 shares on that, depending on whether you have a 4-for-1 margin or 2-for-1 margin, or if you had no margins at all. All right. All those would have yielded you somewhere about almost $5,000 over the next 2, 3, 4 weeks. Does that make sense? And this again, I can't stress how much this is so consistent. And this is just one stock. It's like I'm just going to show you today. I'm just going to show you just one stock that does this over and over and over. You don't have to take my word for this. You can literally go back, take a look at these things, and you'll see the exact same thing happening over and over and over. And so what I do now is I have a list of my stocks where I have a list of stocks that happen in January. I have a list of stocks that happens in February. I have a list of stocks that happens in March, so that way I can have a rotation of stocks that continues to do such things. Make sense? You go back into the options on this again, very easy from the day you decide to get in. And again, there's criteria of what I use to make sure that it's time to get in. But once I know it's time to get into the stock, then it's just a matter of buying the at the money option on that day and then just wait it out and see what happens. So in this case, the at the money options on that day was $143 per share, per contract. And what you see happening is after that, it goes from 143 to like $5 per contract. Okay. By the time it was ready for us to exit the trade, which again could be anywhere from 2 to 4 weeks, and you walk away with your profit. So whether you walk away with profit on the options or you walk away with your profits on the stock itself, this is something that is a very, very consistent thing that takes place. Okay. And again, it doesn't matter what's going on because again, in January 2021, there were still a lot of people concerned about COVID, concerned about the economy, concerned about all this stuff. I just simply wait to see, hey, this is a good company. This company is very consistent. Let me make sure I do the same thing over and over again, right? Now that I know I've done this for the first quarter of 2021, then I just prepare myself again for the second quarter of 2021. Now, the second quarter of 2021 just so happens to be April, May, June, okay? And so in April, Bank of America comes out with earnings again. All I got to do is just wait until it comes out with its earnings. I pay attention to the same thing over and over and over. Did it beat top and bottom? More importantly, I want to make sure that it beat the bottom because that's where the earnings comes in. The earnings is what drives the price of the stock. They beat bottom again. When they beat bottom right here, notice what happened. For about almost 2.5 weeks, what did the stock do? It went down, giving us a discount to jump in. Maybe not the greatest discount. Again, it all depends on how you time your entry. But nevertheless, the one thing I knew is, man, Now that I know that it beat its top and bottom, now that I know it's being discounted, I just need to pay attention to this and make sure I capitalize on that. By so doing, we're able to get in at $39, rolled it all the way up to $43 for a profit of $3,870. Again, this is like within a month, okay? Within a month. And again, it all depends on what type of leverage you use, okay? Depending on how much money you have to shell out. And so the reason why I didn't put a percentage amount on this is because, again, it all depends. If you were the person that has no leverage, you'll be spending almost $40,000 on this. So you'll be making approximately 9-10% in a month's period of time, right? However, if you had a 2-for-1 margin, that 9-10% is about 18-20% that you would return in that same month. If you had a 4-for-1 margin, you're talking about almost a 38-40% return on your money in that 1 month, simply by doing the same thing too. And then once that's over, you can chill, relax, say, you know what? I'll see you again next quarter. Okay. Next quarter being in July. And it's the same process over and over and over again. But in the meantime, some things you can also do is, hey, whether you don't want to buy the stock, I like buying the stocks, but if you don't want to buy the stocks, say, hey, I want to capitalize on this. This is one of the few times where I feel very comfortable buying options on this and just let's see what happens. Okay. Call options on this at the strike price when you're ready to buy, $1.65. So $165 per contract is what you would have spent. You can buy one contract, you can buy 10 contracts, it's all up to you. What ended up happening was in that same duration of time, your $165 would have earned you $385 per contract. Okay. And so it just all depends. But again, it's the idea of, wait a second, how was I so sure that this was going to happen again? Well, I knew that it had earnings. I knew that the earnings report came out. I knew what the earnings report says. I knew that it beat the estimations. And then I saw the stock go down. Perfect. Not a problem. Let's get involved. Then we go to July. Same process, ladies and gentlemen. Now, here's the interesting thing. You would notice that even in July, the stock had been going down for quite some time, going down, going down, going down, going down, going down, right? This was the April one that we dealt with. Here we are now in July, the very next quarter. Same situation, right? Beat tops and bottom, stock drops. Why? People, quarrel. Why is it dropping? Doesn't make no sense. It's not fair. God forbid that you actually bought some call options in anticipation that the stock was going to gap up. Oh, instead, it gapped down, right? I look at that as like perfect. This is exactly what we wanted to do. If the option came out at $39, now it's going back down. We just have to figure out, hey, when is a good time to get into this thing and see where it goes? We ended up getting back in right around the same price where it began to drop, which is that same $39. But next thing you know, from $31 all the way up to $41, that was what we were able to make off of it. And I tell people, look, I don't control the market. We don't control it. But the key is to make sure that we pay attention to the patterns that exist and try to stay on the right side of it. And that's all. And so, unlike before, where I would have been jumping in prior to earnings, trying to anticipate things, and then wonder if it's 50-50. Like now, my probability has gone up tremendously from a 50-50 chance to like literally 80, 90, 95% chance that I'm going to win. Okay. 80, 95% chance that I'm going to win over and over and over and over again. All right. And if you were the type of person where it's like, okay, yeah, I don't even want to, how do you tell when it's time to time it and all that kind of stuff? Or you could just say, look, because I see this pattern happen all the time, I know if I just hold on long enough, eventually I'm going to make more than where the stock began from. Does that make sense? And so the only difference between me waiting is because I know that, hey, I'm going to get it at a discounted price. That's all. So I say, you know what? I'll wait. If I have to wait a week, if I have to wait 2 weeks, heck, if I have to wait 3 weeks just so I can get that discounted price, no problem. I don't mind doing that. Right. But even if I did not wait and I just went in, especially again, once I know it beat top and bottom, perfect. Then it's just a waiting game. Eventually, you would at least at the worst case scenario, recoup if not all your money back, let's say went against you, if not recoup all your money back, a good chunk of that back. But in most cases, not only are you going to recoup your money back, but you would actually make a profit off of it. The only difference now is if you're trading options, however, you have to be very, very calculated, strategic on how you do that. And so this is where this comes in for those who want to take even more advantage of this by understanding how to use this around options. Because unlike stocks, where you can buy it and just sit back, you can't necessarily do that with the options. You have to be on point as to like when you get in so that you know the momentum is beginning to move. The stock is really ready to move because we know earnings is what drives the stock. Let's make sure that we wait in until that happens. Does that make sense? And so in this case, right around the time where it was time for us to get in at $39, the options were going for $1.30 per contract. Okay. You buy one contract, you buy 10 contracts, you buy however many contracts you want to buy. You sit back, let the stock do its thing. That stock went higher. The options went from $1.30 to $2.64, netting you a profit of over 100% in that period of time. The beauty of all this, less headache, okay, less guessing. Does that make sense? It is very manageable. When I say very manageable, meaning that I don't have to worry about overnight gap ups or gap downs. Unlike when I was first starting this and I had to jump into earnings, hoping that, hey, earnings report is going to be great. And when it's great, the stock is going to gap up, right? So now I have to worry about that overnight. And then if I'm on the wrong side of that, when those days used to happen, there was nothing I could do, especially if you're trading the options. It's like the next morning, you'll see that option that you bought literally go down to like, negative 90%. You lost 90% of the value. And then it just sits there at that 90% until expiration day, right? And it's almost nothing you can do about it. Not so with this method, where it does take a little longer. Does that make sense? So instead of an overnight, winnings, what you do is you space it out over a 2, 3, 4 week period of time. You can definitely manage it. Most of the news that makes it volatile are usually out the door by that time. Okay. And so what you'll find is a steady rally, a steady increase in the price once the move begins. The key is to understand when the move begins so that you can take advantage of that. And that's kind of like what we do. And so I can relax. I can check it every night. I don't have to worry about staring at a computer screen every single day. It's just a matter of like watching my tools, watching my indicators, watching everything I need to watch just to make sure that it continues to do what it needs to do. I take my profit. Once my profit is made, and say, oh, I'll see you again next quarter. Okay. And if you think about this, we talk about once a quarter, right? And now, even though I say once a quarter, you'll probably be in that trade in that quarter, you'll be in that trade for like, again, anywhere from 2 weeks to a month, right? So if you're in this stock for 2 weeks to a month, maybe 6 weeks in some cases, max 2 months, before you know it, the next quarter is here again. The next quarter is here again. So it's just rinse and repeat, rinse and repeat, rinse and repeat is what you do. All right. So now we go to the last quarter of 2020, 2021. Does that make sense? So now at the last quarter of 2021, earnings comes out. Here was the earnings. This is one of those rare occasions where we didn't get a discount. It just immediately started going higher, like right away, started going higher. Okay. And so in this one, we didn't get to do much because as soon as it started going higher, it was like, oh man, we need to jump in right away. So we jumped in somewhere around here, and then we had to get out somewhere around there. And that was pretty much it. Okay. So we didn't really get to do much on that one. And so for that reason, we made $940 for that particular trade. The options on those, when it was time to jump in, was about $191 per contract. We got into that and we only made about 18%. And I say only made about 18% because, again, this is one of the few ones where we didn't get to make much because it went up right away. It was one of those things like, come on now, I'm expecting you to come back down. Okay. Where, again, a lot of people, that's what they're looking for. But if you look at what we've been seeing since the beginning, since October 2020, this is now the fifth earnings, and this is the first time in five earnings where it went straight up after that. All others was what? It came back down first, and then it went higher. Okay. Now let me fast forward to last year. So, because again, everything you saw me do right there, it's literally rinse and repeat every single quarter. You get a chance to do this 4 times a year. All right. 4 times a year, you get to do this. And again, depending on how much money you decide to put into it, will determine how much money you walk away with. But now let's fast forward to 2024. Okay. This was last year. Same situation happening. You can see here in 2023, December 2023, same thing happened right here. October, I'm sorry, not December. October 2023, earnings comes out, goes down, major money. It's literally the same process over and over and over. Okay. But now 2024 comes, January 2024, which is last year. Same situation, different quarter. Earnings comes out, beats tops and bottom, makes no doggone sense, but the stock goes down. While everybody was complaining, why is the stock going down? It's not fair. It doesn't make sense. I'm looking at it as like, oh, thank you, Mr. Bank of America market. You are giving me a discount, right? And so now it's just a matter of timing my entry, $32 per share. We're able to get in. That sucker ran up to $34 per share before we knew it was time to exit the trade. Okay. Took your $1,000 profit off of that, depending on how much money you put into it, what kind of leverage you use, you were able to walk away with $1,000 in just a few weeks. Now, again, because of your timing, come in here, buy the at the money options, $1.58 per contract. Those $1.58 per contract, the same time in that period of time, when it was time to sell, within the 2-3 week period, 49% return on your money. Okay. Then the next quarter, like clockwork. Okay. I'm not making this up, ladies and gentlemen. Hopefully you guys have seen this. Okay. Earnings comes out again, beats top and bottom. What happened to the stock? Goes down. Perfect. The only difference this time around was that not only did it go down, but it came right back up. It like almost immediately. It didn't even give us that 1 week, 2 week, 3 week period of it just pulling back. Probably because it had already been dropping prior to that. Okay. But again, unlike before, where I try to jump in front of a moving train, I wait for the train to pass. I see what trails it left behind, and then I take action. And so for that reason, jumped into this one at $37, sold it at $39, walked away with a $2,100 profit. Okay. The earnings on this, same situation, $163 per share, per contract, I should say. Next thing you know, when it was time to sell, sold it for $2.95 per contract for a profit of 80% return on your money. Same process. Okay. Now that's 2 for 2. Again, now keep in mind, we've been doing this for a while, by the way. Like, I think I first started doing this in 2015 is when I first started doing this. 2015. And I started this with Apple, is what I started this with. Okay. But then I like Bank of America because Bank of America stock shares are so much cheaper. Apple shares are like a whole lot more expensive. But now that they've done the stock splits, it's much more digestible. But prior to them doing that stock split, it was super expensive. But nevertheless, still a viable trading strategy. Okay. So now we have here, January comes, first quarter, bing, check, ching, ching in your bank account. Wait for the second quarter. Again, ching, ching, wait, let it goes into your bank account. What are the possibilities that it's going to do it again the next quarter? Well, let's take and see. We come over here. This was earnings. Now, this one, July of 2024, was a rough one. Okay, because earnings comes out over here. The stock drops tremendously. I mean, we're talking about this stock was at $44 per share at one point, came all the way down to about $36. Okay. Now, while all this drop was taking place, what did I do? sat on the sideline. Okay, let's just wait. Let's just wait. Let's just wait. Eventually, the stock started trying to move higher, and it took a while before we were able to get back into this one. But once we were able to get back in somewhere around here, boom, it was time to go. That little move right there alone, just that little move right there alone, doesn't seem like a lot. Okay, netted us $3,400 per share for this trade. The options on those, you'd have got in for $1.74 per contract. Come out by the end with $3.50 per contract. 100% return on your money, just doing the same thing. Okay? Doing the exact same thing. So then the one where we actually took an L happened the quarter after that. I'm sorry, maybe 2 quarters after that. This was October 2024, did extremely well. Okay, extremely well on this one. Again, same situation. Option comes out. I mean, the earnings comes out. The stock goes down for quite some time. This was when the whatchamacallit, we had to wait because the election was coming up, right? So we said, okay, let's wait. Let's see what happens after the election, see what might take place. The day before the election, most people know me. I talk about this a lot, how the election, we're expecting things to go out. But anyway, so I think it was on November 5th, we see this right here on November 5th. And I was like, ooh, okay, maybe it's time to start getting involved in that, right? That was around almost $42 per share. Election comes out, stock gaps up. Why was I confident to jump into that? Because I know that this is what Bank of America does every single quarter. Okay. The gamble paid off. Next thing you know, over the next few weeks, this thing rallied tremendously. And this is what I said, a very, very good return, probably one of the best ones we've seen in a while. $5,000 return on that one. Okay. And then you just go back. So if you look at that, $5,000 for the fourth quarter, okay, $3,000 for the third quarter, $2,000 for the second quarter, $1,000 for the first quarter. You can start adding that up, okay? 1,000 plus two, that's three, plus three, that's 6,000 plus five, right? Just rinsing and repeating the same thing over and over again. All right. So the options on this one was a little bit more expensive, $2 per contract. All right. But that same $2 per contract turned out into $6.50 per contract when it was time to sell. Walked away with some profits. And so all this that we're saying, when I said, hey, the stock itself, $1,000, 2,000, 3,000, 5,000, that's just on the stock itself. The options, depending on what you put in, produces a whole different ballgame there. And so being able to pay attention to that and seeing what happens. So this is the one where we actually lost money. And that was the most recent one that just took place. Okay. So earlier this year, in January, now we were aware because again, I already told people, hey, the market is going to um, market is like looking like it's ready to go down. And so we held off at first when the earnings first came out. This earnings coming out, we held off trying to wait and see, trying to wait and see. And then we eventually decided to jump in after the stock had gone tremendously down. So somewhere around here was when we got in. Actually, I think we got in on this candle right here. This candle or this candle with the expectation that, okay, maybe we can get something out of it. But, to our dismay, that was not going to happen. So we had to exit that trade within 2 weeks. So we were only in that trade for 2 weeks and it just did not do anything. Actually, really less than 2 weeks, but it just didn't pan out the way we wanted. For that reason, walked away with a loss of $300. The options on those, which a lot of people would have thought, oh my goodness, you're going to lose a lot of money. Keep in mind, because the volatility is already out of these options by the time we get involved. implied volatility is already low at this point in time when we try to get involved. Didn't really have that big of an effect. Like where before I would have got into an option the day before earnings, options and premiums are already overinflated. The stock comes out the next day, gaps in the wrong direction. You can forget recovering any of those options back. In this case, here's one where it went against us, but still walking away with a loss of 15% is what we had to look at. Okay. And again, that took us about 2 weeks for that to happen. Okay. And you got to understand, this is in the midst of all the stuff that's going on. Tariff deals, wars, and all that kind of stuff with Russia, Ukraine, whatever type of political unrest, whatever it is, inflation, all this stuff that everybody keeps on talking about and focusing on, all this was taking place while this was happening, right? And then what ended up happening was, you know, just because we took a loss on that did not deter me from saying, hey, let's give it a shot again. This earnings that just recently happened. So if you guys been paying attention last month, Apple came out with their earnings again. Okay. And they came out with their earnings, same story, same process again. Came out with their earnings right there. The stock came down, got in somewhere around $38, $39 right there. And as of yesterday, I mean, today I know it was down a little bit today. Uh, that's what you're looking at right there. Okay. Another 5,000 return on that one right there. And this was literally happening right now. Okay. Literally happening right now. The options on this one, um, again, $2.19 at the strike price that we would have got in. And yeah, I got to go check it today. But as of yesterday, those options were up 164%. Okay. And I call it running profit because we're still in. We're looking for the signs to tell us that it's time to exit that position. Okay. But again, what I like about this is, I'm not worried about a major overnight gap down or anything like that. I could take my time to let this really, simmer, let it really grow, let it really do what it needs to do. And that's the idea behind it. So now that this is still running, it's just a matter of like, hey, let's go in there. There's things that we can do, whether we put a trailing stop, whether we put a stop in place, whether we sell some and then use some of the other profits that we have to buy some cheaper options if we want to. There's so many different things that we can do now that we know that this stock has doubled in price and more. Okay. But that's literally what is going on right now with Bank of America. Okay. You missed this one, no problem, right? Because guess what? We are now in May. In about 2 more months, we're going to have July's earning come out again. And we'll have to repeat the same process all over again. All right. And so when that time comes, the only question would be, would you be ready? Um, Again, I can show you this is like 5 years. I mean, I skipped some years in between, so I can not bore you with the same redundant, information over and over and over. But if you've ever heard people say trading should be boring, right? Trading should be boring. Um, I get the fact that some people have fun, but again, some of the most consistent returns are usually like watching paint dry. And so it is why I end up doing other things, why I'm up here and in Jacksonville talking to the Coast Guard and stuff like that, because, there's only so much you can do every single day without getting too bored. But if you have a system on how to do this right, then it's just a matter of like implementing your system, sit back and watch it do what it do. The other thing I hear a lot of people say, oh, well, this time is different. I mean, again, going back from 2020, like last quarter was one of the few times, I think we had a couple more. But again, the consistency that you have 4 times a year, even if you lose money, the 300 we lost over here, we've already made that $300 back and more with this right here. Does that make sense? Even if you lost $1,000, let's just even say you lost 5,000, which is going to be hard to do, you know. But let's say you even lost $5,000. I mean, you'll recoup that money back before the end of the year, or at least within the next 3 to 4 earnings. Does that make sense? And so this is why earnings became something where I used to dread before to like now I absolutely love it. Okay. When I know earnings season is here, I get giddy, I get excited. It's time to go back out and whip out, hey, what are the stocks that I'm going to be investing in? And the cool thing is, it's not like I have to be sitting in front of a computer every single day. I don't wait to anticipate what the results is going to be. I just wait to hear. So much different. Just wait until I hear the results. So there's no guessing, no hoping, no anticipation, no wishing. It's like, just let me hear what it says. Okay, cool. Now, if it doesn't come up with, excuse me, if it doesn't beat the bottom, again, that's a whole different strategy there. Okay. All I'm looking for is the ones that beat top and bottoms. Okay. If they beat top and bottoms, great. If the stock goes down because after they announced that they beat top and bottoms, no worries. Thank you for the thank you for letting me know that I can get this at a discounted price. That's all that is. It's a paradigm shift. It's a mindset change to make sure that you understand what's going on in the market. When I hear people say, "Oh, you cannot time the market," you cannot time the market. Well, this is what I mean by timing the market. Not necessarily that I'm picking the exact bottom, but timing the market is to me knowing what is about to happen and making sure that you put yourself on the right side of it. Does that make sense? And so, oh, anybody that tells you they can time the market is lying to you. No, what they really referring to is somebody telling you they can pick the exact top and exact bottom. Even I can't do that. But I can tell you when there's top and patterns that are appearing, which means that, hey, sooner or later things are going to drop. But it doesn't necessarily mean I pick the exact top. Likewise, I can see when bottoming patterns are being set. And I say, okay, bottoming patterns are being set. Chances are we're not going any lower. Doesn't necessarily mean I pick the exact bottom. But I know that, hey, things should start going higher from here on out. Same thing with earnings. I hear certain things. I know what to expect. I wait to see the things that I need to see. If I see it, I take action. It's as simple as that. If I don't see it, I wait. It's as simple as that. All right. Any questions? Any questions? Let me see here. Marcia is saying, how long of a call expirations are you buying? That varies, and so typically anywhere from 60 to 90 days is ideal. All right, preferably 90 days just to be on the safe side. It's not a bad idea, but again, it all just depends on what is going on when you buy that stock. How much longer does it have before the earnings and all that kind of stuff? Those are kind of things that you want to be paying attention to. Okay. I hope that answers that question. All right. If there are no questions, I would like to invite you guys to our next workshop on this earnings things where we go into more details. If you go to my link down here, Dave, okay, thank you, Dave. David has helped me put that in the chat box link. If you go to this link right here, rightside.trading.com/workshop, this coming Tuesday, I'm going to be doing a live session. Okay. Part of what we do there is we try to make sure that we go in there and I'll show you the indicators that I use to help us pick that entry and exits properly. Again, anybody who knows me, I don't guess. I don't believe in guessing. It's not about having a hunch. It's about seeing information, seeing data, seeing indicators. I'll show you the indicators that I use to kind of help with that, let you see how to tell. Because again, the key is we know it beats top and bottom, and we know it's going to move. So it's just a matter of like, okay, how can we tell when it's time to start jumping in? Okay. Marcia to ask the question, hey, what expiration do you pick? I will show you how we determine which is the best expiration to pick, so we can capitalize on the potential without risking too much. Does that make sense? How do you manage it along the way? This is super, super important. This is where understanding the right tools to help guide you comes into huge play because I'm here to tell you there is going to be market volatility in the sense of news, in the sense of all kinds of stuff that takes place. The key is to make sure that you understand, yep, I need to take action, or you know what, just ignore that news. Does that make sense? And that is something that is paramount in making sure, because what you don't want is, how many people have seen the market and in the morning is like down big, like huge, big. You start panicking, selling, selling. By the end of the day, market recovered everything and even back up. Even today was an example of that, right? At some point, the market was negative, right? You see something like that and you start panicking. And what you'll find is, again, if depending on how you place your stops, if you place your stops, if you're watching this, your mind has a way of tricking you to get out of that trade. And next thing you know, you're not optimizing the profits. And so I'll show you very simple ways on making sure that, hey, as long as these things don't happen, you don't have to worry. I'll say, bite your fingers, walk away, and come back unless these things happen. If they don't happen, don't do anything. Okay? Because this is going to help you with your timing of when to buy. It's going to help you to the timing of when to take profit. And then in the event, in the rare occasions that you end up losing on that options, on that earnings trade, whether it's because you traded options and you didn't follow the rules and all that kind of stuff, I'll show you how to recoup some of those losses back. Does that make sense? If not all of it back. Okay. Because again, it's just a matter of understanding the opportunities. We already know that it's going to go up. We know it's going to go down. We know that there's a possibility for the option premiums to start getting more expensive or getting cheaper. All these things factor into play. And so there are things that we can pay attention to, whereas like if we made a mistake and we got into it and we're on the wrong side of things, but we're, adamant about recouping the losses that we had, there's a few things that you can pay attention to that will show you, yep, here's now is the time to go out there and retake that trade again or place another trade to recoup the losses that you put on. Okay. And in this case, not necessarily like it's going to turn into a humongous profit potential type of thing, but at least you'll recoup some, if not all of your losses or more. Okay. So if you come join us, again, all you got to do is go to this link right here. This Tuesday coming up, 7:30. Okay. 7:30 p.m. We'll come in there. We'll be there for like about hour and a half. Just go in there and you'll see how to use this to help you. Okay. All right. I think that's it on my end. Any questions on anybody's end before I turn it over to Dave? Is there any stock that you want to take a look at that might help you? Let me just show you this while we're doing that too as well. Because again, hopefully you guys got this link down there here. Let me show you this. Um, let's see here. Okay. You know, um, here's the S&P 500, and we can see, let me see here. Look at this monthly chart. Notice how it came back down and it's kind of going back up. We saw this top right here. More importantly, we saw this based on what we saw up here and then what we saw down here. This right here made us know that we're ready to go back up again. And that's why, like I said, on April 7th, somewhere around here, was when I say, yep, the market is put in the bottom. And lo and behold, you can see the market is going higher. At this point, I think we're like just a few more percentages away. Let me see, how far away are we from the new all-time highs, or at least the all-time highs? We're not that far off from all-time highs. Come on, Wally, try this again. Let's say from here, approximately like 4%. Okay. But again, nothing is about guessing. It's really just understanding how to see things and making sure that you put yourself on the right side of it. Okay. All right. If there are no questions, that's it on my end. There is a fast action if you go to the website. For those who take action today, if you go to that link, we also give you a video on the VIX, which is super, super important. Most people are not aware of the VIX and how to tell when volatility is going up or going down. And so if I go over here to the VIX, one of the reasons why we also knew for sure that the market had bottomed was because of what we saw over here. And without going into details about it, I'll just say um, those who were following me when this happened up here, I told them, I said, yep, the VIX has come to an end. What's going to happen now is that the VIX is going to go lower. And because we knew the VIX was going to go lower, we knew that we had already set a bottom as well. Okay, so this was the first clue that told us we're about to set the bottom, and then April 8 came around, which is somewhere around here, and it was like, yep, we've definitely set in the bottom. But the key is we were able to see this stuff. You might be looking at it as like, what do you see on here? That's what we cover in the VIX volatility course. So if you get to sign up for this live webinar, one of the things we'll give you is the VIX volatility video for free. All right. So you can start paying attention because everybody likes to talk about VIX spiking, but very, very rarely do you hear anybody talk about the VIX has come to an end. Okay. And that alone is worth understanding because once you know the VIX has come to an end of that spike, then the only natural direction is for it to do what? Come back down. And if that's happening, then the stocks is probably perhaps going to do the same thing too. All right. Okay, that's my time. Thank you, Dave. I'm going to turn it back over to you because my time is up here. We look forward to anybody who's joining us on Tuesday evening at 7:30. Thank you, Dave. Appreciate you, man.
Um, Actually, I don't see hands in the room yet. If you have any other stocks you want to look at quickly, take a few more minutes. Oh, there he is. Never mind.